Hey, welcome to the call. Welcome to the call. We'll get started shortly. Good evening. Welcome to the Money Training Call. How's everyone doing? Who do we have online with us this morning? This evening. This is Rudy Clay Jr. out of Gary, Indiana. Who else do we have online with us?
We got Bridget.
Hey, Bridget, how you doing? Welcome to the call.
Candace.
Warner Robbins, Georgia, the host of the Money Call. Who else do we have online with us?
Benny Muhammad.
Hey, Benny Muhammad, Gary, Indiana. How you doing, man? Welcome to the call.
Thank you.
Who else do we have online with us?
Candace.
Hey, Candace, welcome to the call. Welcome to the call. Good to have you. Well, we're going to get this call started. There's more will be coming on. But without further ado, we always lead this call with prayer. So, Father, Heavenly Father, bless us abundantly today and every day. We want to thank you in advance for all that you're doing and waking us up every morning and keeping a smile in our heart and keeping us happy, healthy, and wealthy. Continue to bless all the Team Win members and also take care of all those in the hospitals around the world, that you will comfort and heal them. In Jesus' name, amen, amen. All right, let's get this call started. Now, we are getting back into the Candlestick Bible. And we're almost through with it. The Bible is 168 pages, and we're on 109 pages already. So that's pretty good. So Everybody should learn a lot, and I want to pray for that tonight, that everything is absorbed very easily and understood. Amen. Okay, so now tonight we're starting with the engulfing bar candlestick pattern. Now we did, go over the engulfing bar previously, but this is the candlestick pattern. So let's hit it. Y'all ready?
Sir.
If y'all ready, put a 111. No, psych, I'm just playing. They be wearing out their chat room on some calls, I tell you. They say, hey, if you just said your name, type of 111, 777. No, let me quit playing. Okay, let's get right into this. Okay, the Candlestick Trading Bible, the engulfing bar candlestick pattern. Now, the engulfing bar pattern is one of the most powerful and profitable price action patterns. Knowing how to use it properly as an entry signal will tremendously improve your trading profitability. Now, in this section, you will learn how to use the engulfing bar pattern profitably. It doesn't matter if you are a beginner or advanced trader. If you are looking for a serious and better trading strategy, more than what you have been using, you have come to the right place. Now, what is an engulfing bar pattern? What is an engulfing bar pattern? Well, this reversal candlestick pattern consists of two opposite colored bodies, in which the second body engulfs or covers entirely the first body. And we see that right here. You see this engulfing bar engulfs the previous candle totally. That's what it is. Everybody, welcome to the call. Welcome to the call. And you see the same here. It doesn't matter if it's a bullish or bearish, as long as it engulfs the previous candle. So a bullish engulfing pattern forms at the end of a downtrend, and it provides a clear signal that the buying pressure has overwhelmed the selling pressure. Now, in other words, the buyers are now involved. Now, a bearish engulfing pattern, that's this right here at the bottom. Okay, a bearish engulfing pattern occurs at the end of an uptrend, and it is a top trend reversal indicator. Now, that's something now I want to read that again. When you see, and we usually judge it by the doji. Remember, President? We say, oh, it might be a reversal. Well, this saying that bearish engulfing pattern occurs at the end of an uptrend. It is a top trend reversal indicator. That means once you see that doji and see, it's a little different than what we do. See, when we see this doji, we know that's an evening star forming, so we catch it before it already forms. What this is saying that this is a leading, one of the leading trend reversal signals on continuation, when it continues down, okay? So in a bearish engulfing pattern occurs at the end of an uptrend, it's a top trend indicator, reversal indicator. We see it at the doji as a top trend reversal indicator. Once this starts forming, we don't let it go all the way and then say, okay, it's a reversal. We get that evening star as well. So it shows that the bulls are no more in control of the market, and see price trend, and the price trend is likely to reverse. See an illustration below. Now, this is a straight down trend. You see how this is a straight down trend? And then that last downtrend candle has an engulfing candle. That wasn't even a doji, so this is good. You see this bullish candle is a whole candle that's bigger. Excuse me for yawning. Wow. That's bigger than the previous candle. So this is an engulfing candle. And it says it's one of the top. One of the top? Wow. So we want to keep that in the back pocket, huh? So this is one of the top engulfing, top trend and reversal indicators. Okay. Now, according to Steve Neeson, the father of modern candlestick charting, the candle must meet three important criteria to be considered as a reversal pattern. Number one, the market is clearly in a definable uptrend or downtrend. Number two, the engulfing candle comprises of two candlesticks, and the first body is entirely engulfed by the second one. And the second real body is the opposite of the first body. That means if this is bullish, this is bearish. If this is bearish, this is bullish. Okay, so the bearish engulfing bar, when this is going on an uptrend and then it gets toward the ceiling, we know about the ceiling, and then the next candle totally engulfs the previous, it signals a downtrend. Okay. Any questions on that? So how to trade? Since we know that's that. So how to trade the engulfing bar price action signals? Now to trade profitably this chart candlestick pattern, you need to respect three important elements. Number one, the trend. And the trend is your friend. We always say that. So if you look at any chart, you will notice that there are times where the market is moving clearly in one direction and times where it's moving sideways. So to be honest, trading the engulfing bar pattern with the trend is the easiest way to make money in the market. You always want to go with the trend. The trend is your friend. So you don't need to be highly knowledgeable about technical analysis to determine whether the market is trending or not. Just, make it stupid simple. If the market is making a series of higher highs and higher lows, it is about an uptrend market. And if it is making a series of lower highs and lower lows, it is simply about a downtrend market. Do you guys understand that?
Yes.
Yeah. See how this uptrend is it's a low, and then it's a high, then it's a higher low. This low is higher than the previous low. And this higher high, that high is higher than the previous high. And then this higher low, this low is so it's a higher highs and higher lows, higher highs and higher lows. It means the uptrend. So the illustration above shows a clear uptrend. You don't need to use an indicator to determine whether the market is trending or not. Just look at your chart and apply the concept of higher highs and higher lows and vice versa. Now, when you are analyzing your charts, bear in mind that the market moves in trends, and trading with the trend is the most important element in your technical analysis. There's no more important than there's no more important than the trend. Don't never try to fight it or to control it. Otherwise, you will pay expensively for trying. So always roll with the trend. The trend is your friend. Who remember Daisy Duncan? The trend is your friend. The trainer, the first trainer from At Marcus Live when it was At Marcus Live.
I remember.
Yeah. I met her and took a picture with her. Okay, you can make money under any market conditions, no matter how powerful is. You can't. I'm sorry. Let me rephrase that now. You can't make money under any market conditions, no matter how powerful is your trading system. You have to be patient enough and let the market tell you which direction it's going to take. You got to find the trend. So successful traders say the trend is your friend. So, and if you want to master trading the engulfing bar pattern, your first rule is to follow the market direction. In other words, the trend should be your best friend. So that's the first thing we look on when we go to the higher time frames. We'll go to the let me show you here right quick. We'll always go to like the hour chart. Because we're looking for the trend. Okay, you guys see that? Okay. So number 2, the level. When you find clearly definable uptrend and downtrends, the next step is to identify the most important levels in the market. And I mean the most powerful support and resistance, the floor and the ceiling. So if the prices test a floor level, a support level, and stop, this is an indication that buyers are there. And this area is watched by all participants in the market because it represents a great buying opportunity because it's at the floor, it's at the support level. And so conversely, if prices test a resistance level, a ceiling level, and stop in an uptrend, this is a clear signal that the selling strength is in the market. The example below shows how the market participants interact with a support and resistance level. And on the money call, you know we eye this with our eagle eyes. We don't draw the support and resistance lines. We just eye it, and so you can clearly see this is a resistance test, 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 test. You see this whole zone. You can clearly see this as support because it never broke it. You know, it broke it right here, and then it retested it as the ceiling. So let's look at this. These levels take different forms, such as trend lines, channels, flags, triangles, and your ability to identify them in your chart will help you find the better price levels in the market. Because some people have different things, like, I'll give you a good example here. Well, let me find some. You know, like Bridget the other day talked about the head and shoulders, or sometimes you might see a W, you know, or M shape, or you know, or the flags or the channels. You remember I showed everybody like a diagram of is it still on my let me show you this right quick. Desktop, is it on my desktop? No. Let's try this again. This is, I really want to show everybody this. This is pretty, last 30 days. Let me see. Okay, I hope I don't have to be determined again. You know, when you be determined and you just go through 1,000 pages to find one little thing. Well, we'll get back to that. But do anybody remember when I brought up all those different chart patterns? Okay. Well, that's what this is talking about. So in trending markets, when prices pass through the resistance level, well, this is the resistance level. So in trending markets, when prices pass through the resistance level, that resistance could become support. See the illustration below to understand how to trade the engulfing bar pattern with support and resistance in a bullish or bearish trend. Okay, you see this resistance becomes support. See right here, it's resistance. It's the ceiling. It's the ceiling. And it come down. It broke through the ceiling and came down. Now that ceiling is support. Everybody understand that? The resistance, the ceiling becomes the floor. And now you have an engulfing bar. And this is something that I need to blow this up just to really show everybody this. I'm trying to, here we go. Okay, this engulfing bar is not like what we would previously, and I thought it was. It includes the wick. See, the first engulfing candlestick was just the body of the candle engulfed the previous. But the engulfing bar, as we see now, is different. It includes the whole candle, including the wicks. engulfing the previous candle. You guys see that? So that's the difference between an engulfing candlestick and an engulfing bar. Okay?
Mhm.
Everybody got that?
Yes.
So you see how the engulfing bar,
No, sir.
huh?
No, sir.
Okay. You've been on the calls previously when we dealt with the engulfing candlestick, and it was
Yes.
just like, yeah, it was okay. I'm gonna go now. You're gonna get it this time. I'm gonna explain it very well right here. Now watch.
Mhm.
You see this section of the candle right here?
Yes.
That's called the body.
Yes.
So when an engulfing candle would be something like, well, let's do it backwards. You see this body right here
Mhm.
is bigger than this body.
Mhm. Mhm.
It's an engulfing. I'm just doing it backwards now, just for
Got
illustration purposes.
Mhm.
Well, if this body engulfs this body,
Mhm.
that's an engulfing candlestick.
Mhm.
But if this body and wick included engulfs the previous candle. See, this body is not engulfing this previous candle. It's the body plus the wick engulfing the previous candle. There's a
Okay.
difference.
Yes, it
You
is.
got it? So
Mhm.
this is the engulfing bar.
Okay.
It's not the engulfing candle.
Mhm.
You got it?
Mhm. Thank you.
All right. Okay.
Because to me, the engulfing candle is like it's a double top.
It
That
can be, yeah.
okay. All right, but the engulfing bar is totally different. Thank you.
Right. And engulfing bar includes engulfing with the wick, and the other it's
Thank
just
you.
engulfing with the body only.
Mhm.
Like, give you a good example right here. Let's see another example. Oops. Now you see this. This is an engulfing candle. The body is bigger than the previous body.
Mhm.
This is an engulfing bar. The body is not engulfing that, but the body plus the wick is engulfing the previous candle.
Mhm.
You
Thank you.
see the difference?
Yes,
Hmm.
thank you.
Okay.
Good job. Good job.
Okay. So there are other technical tools that can help us find the best levels in the market, such as supply and demand areas, moving averages, and Fibonacci retracement ratios. And number three, the signal. The signal here is an engulfing bar pattern, and you can apply the same rules when trading the inside bar candlestick pattern. Oh my God, the inside bar candlestick pattern. Now, is can I just put a little humor here, right? Uh, have you
Yes.
heard of churches with them long names to it? Ebenezer Baptist Church of the Living, this and that, and bop it, dip, bam, and Baptist Church. Well, that's when I read this. I said, oh my God, this is the inside bar candlestick pattern. And it's just, we don't learn it all, ladies and gentlemen. That's all I'm saying.
Good.
We've been through this book several times, but this one just kind of stuck out to me here this evening. The inside bar. Now we ain't talking about the bar. We was just at the engulfing bar, but now we getting ready to get to the inside bar candlestick, engulfing candlestick, key level probability. I'm
All
just
right now.
so that's my joke. Now that's over with. Now let's get back to business. Nobody laughed on that one. So the
We
signal
did.
here is an engulfing bar
We
pattern.
did. We're on mute. We laughed. Thank
Okay, okay. So the signal here is an engulfing bar pattern. You can apply the same rules when trading the inside bar candlestick pattern. So your ability to identify an engulfing candlestick at a key level in a clear uptrend or downtrend will greatly enhance the probabilities of making a winning trade. Now see another example below. Okay, now you see this zone is a resistance level. It tested that and bounced back down. Tested it and bounced back down. It broke through the ceiling, the resistance, and then came back down and tested it as the floor. You all see that? Now the engulfing bar is the wick and the candlestick. It engulfs the previous candle, so it signals an uptrend. Even though we trade a little bit more specific and closer to the double top coming down and the double top going up and all that kind of stuff. But overall, this candlestick Bible is kind of based on longer term trading. So that's why it's, might seem a little different here. But it goes above, then comes back down and retests the what used to be resistance is a floor now, and then it continues up. It continues up, and that's how trends are. It's the low, the high, the higher low, the higher high, the higher low, the high. You see, so when it breaks resistance, we call it a breakout, and we ride it, but then it can retrace halfway, so to speak, and now the resistance becomes the floor, and then it goes into continuation, and then a higher low, and a high, so that's how it works. Okay, trading the engulfing bar with moving averages. Okay, now we're getting into some good stuff. Okay, trading the engulfing bar pattern with moving averages provide a very profitable trading strategy. However, the lack of knowledge about using the moving average can damage dramatically your trading account. So traders use moving averages in different ways. As a trend following tool to identify the direction of the trend, so they buy the market when prices are above the 200 simple moving average. See, that's longer term. We use the 50. And they sell the market when it's below the 200 simple moving average. And you know how I say if it's above the EMA, it's a buy. When it's below the EMA, it's a sell. That's what they're saying. But they're just using a 200 simple moving average, okay? So to determine whether the market is overbought or oversold, now we know this is an illustration. When it's above the 60, it's overbought. When it's below the 60, it's oversold. When it's above the EMA, it's basically a buy. When it's below the EMA, it's basically a sell, long as it's below and above at the same time on the RSI. So when it's overbought, this is what they're getting ready to explain, meaning above the RSI. And when it's oversold, meaning it's below on RSI, that's what they're getting ready to explain. So I just want to give you illustrations of that. So to determine whether the market is overbought or oversold, we just watch how prices interact with the moving averages. For example, in an uptrend, if prices move far from the moving average, this is an indication that the market is overbought. We have the RSI to show us. Now, to predict the trend change by using the crossover strategy. If the moving averages crosses over another moving average, it is a signal of a trend reversal. So as any trading system, the moving averages have disadvantages, and this is why you have to know how to use it successfully under the right market conditions. This trading technical tool doesn't apply to all markets. Don't even try to use it in a range bound or Untradeable markets, like a choppy market, because you will get a lot of false signals, and we know how to identify false signals with the RSI. That's why I say God got us. And so, because you will get a lot of false signals, and you will definitely blow up your trading account. So the best of my knowledge, using the moving average as a dynamic support and resistance in trendy markets in combination with an engulfing bar pattern signal, is the perfect way to make money in the market. Now, I'll show you an illustration of it. Now, the strategy is very simple. We use a 21 and the 8 simple moving averages in the daily and 4-hour time frame. See, that's a lot longer time frames. And we define a clear bullish or bearish market, and we simply buy when prices pull back to the moving average, and then engulfing bar pattern forms. See illustration below. Now, you see the 8 moving average is the blue one, and the 21 is the red one. And so the blue crosses above the 21 moving average, and is acting as like a resistance level. I mean, a support level. It acts like a support level. But when this engulfing bar pops up in here, that kind of signifies a stronger trend going up. And so it says, conversely, if the moving average is trending down, it shows that the market is in a downtrend. And we sell when price retrace to the moving average. Now, the screenshot below shows how prices interact with the moving average as dynamic resistance level, and how the engulfing bar pattern represented a high probability setup. Now, this is good. Let me pull it up a little bit. Okay. Now first I want to give you an illustration here. Okay. Now, you see we have a 50 exponential moving average, and it kind of, in a range market, it's not telling you to support and resistance, so it's not, now if you put an extra moving average on it, and we used to do the 4 and the 50. Let's just put a regular moving average. And we're going to make it a 4. And we'll make it bright red or something. Thick. No, red is not a good one. Okay. And we're going to make it a 4. The 4 and the 50. And I might have went over this previously with everybody. But you see how tight, let's make it an 8. I'll even show you. We'll do the 8. Okay, you see how this follows the candlestick so tightly? It follows it so tightly. So when it crosses above the EMA, it's a buy, and when it crosses below, it's a sell. And so we used to do the 4 and the 50 because the 4 is even tighter. That's the 4. Now, you see how tight that really follows the candlesticks, right? Does everybody see that? How that is right there with the candlesticks.
Right.
So what God has showed us is say, hey, man, since you're doing the 4 and the 50, and the 4 is so tight to the candlesticks, why don't you just take the 4 out and let the candlesticks act as the 4 and the 50? You see what I'm saying? It makes it more simpler, and it's the same thing. It's the candlesticks is acting as the 4 and the 50. The candlestick is the 4, and the yellow is the 50. And it's less clutter on your chart. It's more simple, okay? So now let's go back. So this is the 8 and the 21. So when the 8 comes below, it's supposed to be a sale and all that. But the engulfing bar signal indicates that it is really going down because but that includes the wick too. It totally engulfs a bullish candle, and it's continued to go down. Now here's another engulfing bar signal. Now Bridget knows that we don't really look for engulfing bar signals come because we can find this double top right here and know that's coming down too. You know, we don't look at this as an engulfing candle. We look at that as a double top coming down. So we have our way of getting the same results from the same thing. Okay, an example would be right here on the illustration. Um, Look at this. This is an engulfing bar. Because you see including the well, this is engulfing candle anyway. But let's just let me find a better example. But I'll explain this. But we'll look at a double top and know this is coming down. But a better example of what see, this doesn't have no wicks here. Okay, let's go here. Now you see this is an engulfing candle with the bar and engulfing. We just see it as a double top coming down. Okay? So we get the same results, and then we've been through the Candlestick Bible a couple of times, but this same results, you didn't have to wait till here to know that it's a downtrend. It started up here, you know. But so just, I want you guys to know that we don't, follow it exactly, but we know what it's about. We really deal with these candlestick charts. So how to trade the engulfing bar with a Fibonacci retracement? Oh boy. Mm, mm, mm. So traders use Fibonacci retracement in different ways. However, the most important Fibonacci retracement levels are that 50% and that 61%. Fibonacci retracements, knowing how to use this tool in conjunction with Japanese candlesticks, will definitely maximize your profit potential. So according to the chart technicians, the most major moves retrace around 50%. And we've peeped that out, the half a candlestick, 50% retracement. And we don't need the Fibonacci to see that. But according to the chart technicians, the most major moves retrace around the 50% and 61% Fibonacci retracement. This knowledge will provide you with the ability to predict with high accuracy the next major move in a trendy market. Now, mind you, these are on higher time frames. Now, the strategy is very simple. You define a clear uptrend or a downtrend, because that's always first. The trend is your friend. And then you define major corrective levels by using Fibonacci retracement tools or your eagle eye. If you see an engulfing bar pattern matches up with the 50 or 61% levels, it is a powerful price action trading signal like we see in the chart below. Now, the resistance becomes support. It seems like I've seen this chart before. I'm going to blow it up a little bit for everybody. Oops. Okay. When you put a Fibonacci retracement tool, you always go from the floor and you find the ceiling. And I'll give you a good illustration right here. Okay, this is where the Fibonacci's tool is, over here. And where it's the Fibonacci retracement tool right there. you go to the lowest point and then you drag it to the highest point. So then you see these numbers here. There's the 61%. There's the 50%. You see how that is? So that's the retracement tool. This one has colors in it, and some charts it doesn't have colors. And then so it kind of gives you that if this went all the way down here, I'm sorry, do I have it backwards, Bridget? No, no. This will be retraced at least 50%. And so it went all the way up here, and look, where's that 50% line at? Right here. This is the
Mm-hmm.
50% line, right here. Look
Yeah.
at it. It hit the 50%. It hit the 50%. You know, we will say right here is 50% of this candle. And guess
Mm-hmm.
what? Look, boom, it hit right there, halfway, 50% retracement of that candle. So we do it with our eagle eye. We call it work needing to be done on this candle. You know, work needing to be done. But the Fibonacci retracement tool will show you these levels, okay? And then if it's going to 100% retrace, it'll hit this line. It might not go all the way 100%, but that's that Fibonacci ratio that it's dealing with, okay?
Mm-hmm.
All right. Oh, let's go back here. Okay, and the example above, the engulfing bar price action signal matches up with the 50% and 61% Fibonacci retracement level. The resistance level that becomes support is another confirmation to take this high probability setup. And let's go over that so everybody can understand it. In the example above, so we want to look at it. The engulfing bar price action signal matches up with the 50%. See, if you pull this up, there's the 50% level right there, and it kind of matches that area, the 50 and the 61, right there. So when it matches that level, become support is another confirmation. See, this level has become a floor. It's become support. See, up here, it broke through the resistance level and came on up to the Fibonacci, and you put the Fibonacci on it. And this one basically is drew down. Sometimes you draw the Fibonacci up and down, and sometimes down according to the downtrend or uptrend. And so it pulled it down here, and it came down to the floor now. It used to be a ceiling over here as resistance. Now it's a floor for these candles coming down. And they tested that floor, had an engulfing candle or engulfing bar to show that it's continuing on up into an uptrend. So that's another confirmation to take this high probability setup. Now, this trading strategy is very powerful. Here's another example below that. It illustrates the power of the 50% and 61% Fibonacci retracement. Same thing. Now, this is going down and came on up through the resistance level, and then it had an engulfing bar, and look, it's right there at the 61%, right at, and we don't use the Fibonacci, we just use our eagle eye, but you understand how how the resistance becomes support and vice versa. So trading the market from 50% and 61 Fibonacci levels means you are trading from better price levels. As a result, you will put as many probabilities in your favor as possible, and that will allow you to become one of the most successful traders. So, you know, on your time, study and learn how to use the Fibonacci. If you want to just, man, let me throw a fib on it. That, you know, that's what they say. Just throw a fib on it right quick. See what's happening. You know, so you want to know everything. The more you know, the easier it is. Now, trading the engulfing bar with trend lines. Now, trend line gives traders an idea about the psychology of the market, especially the psychology between buyers and sellers. Moreover, it allows professional traders to determine whether the market is pessimistic or optimistic. A good tool for that too. I like is that currency heat wave. It'll give you the sentiment. Now, this technical trading tool is used in different ways, either as a support and resistance by drawing them horizontally, or to identify price and time by drawing trend lines vertically. There is no wrong way in using trend lines, but and we use our eyes, so there is no wrong way. We use our eagle eyes, you know. So in trending markets, we use simply trend lines to highlight a trend by connecting the swing highs and swing lows in price. And this way helps us find high probability entry setups in line with the general trend of the market. See illustration below. See, that's a trend line. We just draw point to point to point to point. And there's an engulfing bar, you know. So by connecting the extreme highs, we had a trend line that acted as a resistance level. And the formation of an engulfing bar pattern shows a good selling opportunity. See, this is like a resistance level. It went up to the trend and it bounced off. It came up to that same area, you know, on the boom, came up like that. And then it played around and came on that, and then it has an engulfing candlestick, and you know this is at the trend line area. You know it's a trend. So that engulfing bar signal is a good opportunity for a sale. Just like it was a good opportunity for a sale here. It's a good opportunity for a sale here. It's a good opportunity for a sale here. It matches the trend line. Let's see. And I'll show you the illustration on it. Let's get rid of the field. The delete won't come up for me.
Do you see a little
Oh,
circle or a
it
little?
usually come up. Oh, let me go back down. It's at the bottom. Nope, it's not there. There we go. Okay. Now, let's show you the trend thing. Trend line. You can draw a trend line, boom, and you can just hit the points, you know. Oh, did I get it? Make it thicker so you can see. And then just, you see how these points
Mm-hmm.
see it's respecting the trend. And then the breakout, you know. And it really is still following the trend, basically. Okay? So
Mm-hmm.
that's on the trend lines. When you can draw this in advance, like give you a good example. Let's say we're coming all the way to the end right here, and you want to draw a trend line. Okay, so when this starts coming down and it comes down toward the trend line, it's an opportunity to buy because it might bounce back up. You see that? Or or if you put this trend line, let's say right here. So when it hits that and it hits that, you know that's an opportunity for a sale. It hits that opportunity for a sale. When that comes on up and hits that, it's an opportunity for a sale. Okay, that's what it's trying to explain. Okay, everybody see that and got that?
Mm-hmm.
It just happened on a downtrend. So by connecting the extreme highs, we had a trend line that acted as a resistance level, and the formation of the engulfing bar pattern shows a good selling opportunity. So if you use just horizontal support and resistance level, you will miss this profitable trade. So learning how to draw trend lines is never a bad idea because it's the simplest analytical tool that you can use to analyze financial market. It works on all markets, whether it's forex, commodities, futures, or options. And we call it the eagle eye.
Eagle
We use
eye.
our we use our own eyes. We don't draw the lines. But you guys get the gist of it, right? It respects those areas. Now, engulfing bar just confirms what you already know with the trend. Okay, the trend is your friend. So the chart above shows a bullish trend, I mean an upward trend, and the trend line acts as a support level. The price action signals that occurred created by a great buying opportunity. So what this is showing is the same thing, only in a different direction. It respect. Now, really, you could have pulled that trend line up here too. See that here's the eagle eye. Okay, good. Develop your eagle eye right now. Here it is. You see this trend line? Pull it all the way up to here. Now you see right there, right there, right there, right there, right there has respect in that right there, and then it broke out. Now, take this same line. So that's acting as a support level. Now, take this same line and put it on top. You see where it's respecting that, respecting that, respecting that, respecting that as a ceiling, as a resistance level. So every time it hits that, it's a good time for a sale. Every time it hits that invisible trend line, it's a sale. Every time it goes up to hit that trend line, get ready to come. Did everybody get that? How it's respecting that, and you see it with your naked eye. Don't we see it? Just imaginary draw a line up at these points. Okay, so
Mm-hmm.
that's the illustration of it. So the chart above shows a bullish trend. The trend line acts as a support level. The price action signal that occurred created a great buying opportunity. And even if you pull this trend line up, that's the support level too, right there. But on a higher and longer time frame, this is the trend line. But that is too the same thing, only on shorter trends. So how to trade the engulfing bar in sideways market? Getting that range market, that consolidation. And then we always say either use scalp or wait for the breakout. So one of the most difficult markets to predict can be the sideways and ranging markets. I always recommend traders to focus on trading the trending markets because they're easier. The trend is your friend. But the problem is that the markets spend more than 70% of their time in the ranging motion. Wow. So if you focus just on trending markets, you will probably leave a lot of money on the table. This is the reason why learning how to this is the reason why learning how to approach range bound markets is a must if you want to make a decent living trading financial markets. Well, that brother had a muffler on here. Okay. What is a range bound market? We know what a range bound market. We went there earlier in the earlier chapters. When the market stopped making higher highs and higher lows in case of an uptrend, or lower highs and lower lows in case of a downtrend, the price starts acting between specific high price and low price, meaning a ceiling and a floor, meaning a resistance level and a support level. This is a clear signal that the market is ranging and no longer trending. See illustration below. And that's why you hear me say it's just going from the ceiling to the floor, ceiling to the floor, ceiling to the floor. All you can do is scalp or wait for the breakout. Like right here, breakout. Okay, so as you see in the example above, the market is trendless. and it is trading between horizontal support and resistance for a ceiling. So I mean, and you can apply the same techniques that you use in a trending market to trade engulfing bar patterns in a ranging bow market, and we always talk about that, and that's why we switch to a practice account in ranging markets sometimes because it's a scalping market. I mean, you can't um, well, how can I say it? The market dictates on how you're gonna trade. So if it has a ranging market that dictates how you're gonna trade, you're scalping. On the 5 minute chart. Now longer time frames is different, but uh, the market dictates how you trade. Okay. So let me give you an example. When you are driving your car, you don't always drive the same way. If you are driving downtown, if you try to drive slowly because you know that driving fast can put your life or other lives in danger, but when you are driving on a highway, your driving style changes completely because you know that you can drive fast. So you always try to adapt your driving style to the appropriate situation. That's the same in the market. So you have to do the same thing when you are trading the engulfing bar pattern because all price action strategies we discussed before will not work in a range bound markets. And you will have to use the right techniques that fit these market conditions. So before talking about the right way to trade trendless markets, you have to be selective about trading range bound markets to protect your trading account because not all sideways markets are worth trading. You have to know how to differentiate between sideways and choppy markets. Yeah, them choppy. And I said I was going to find that picture for you guys to see this morning. I took a picture of a choppy market when that pandemic started that you would not believe. See the illustration below on the choppy market. Okay, this is a choppy market. It's just up, down, up, down. Well, usually choppy market have more wicks too. You get a whole bunch of wicks, choppy market. Okay, so as the illustration above, the market trades in a crazy way. We can't identify major support levels and resistance. You have to stay away from these types of markets. Otherwise, you will definitely damage your trading account. Yeah, cause I'm like, okay, where's the ceiling and the floor? Wait a minute, that's the ceiling, that's the floor, that's the ceiling, that's the floor. It's choppy. So trading the engulfing bar candle in a range bound market is very simple. The first strategy is going to be about trading the price action pattern from major support and resistance levels, like we see below. Engulfing bar, resistance, support, just ceiling the floor kind of thing. They say that's an engulfing bar. We just look at it as a double top getting ready to come down. So the second strategy is to trade the breakout of the range or to wait for the pullback. See the illustration below. The pullback. Uh-oh. So the resistance level. Here's resistance level. Here's the. Let me blow it up so everybody can see this. Okay. Okay, resistance level and the engulfing bar, because it includes the wick as well. But what we see is a double top, don't we? We see the double top. A double top at the resistance level at the ceiling, we know that thing is coming down, but it's also an engulfing bar too. Okay? So now this is a false breakout because you see this long wick is pushing down. We see an evening star forming. You see another long wick pushing down, and you see a double top, and you know it's at the ceiling. Your eagle eye will tell you that it's going down. And it comes down right to the support level. And the engulfing bar, it breaks through the support, and now the support becomes the resistance. And it comes up and breaks through the ceiling, and now support becomes support again. And now it breaks under, but here it retests right there, the engulfing bars right there. And we looking at what? The double top retesting the new level of resistance, the new ceiling. So we know that's coming down. But what I was excited about, they said, but what about that retrace? Ooh, look at the. Now, this is kind of choppy when you get a lot of wicks like that, but I wouldn't call this technically choppy. But that was pretty interesting to see when it said about the retrace. Wait for the pullback. I'm sorry, the pullback. Oh, it pulled back. Oh, that's what it's talking about. It pulled back right there, not here. Okay, the third strategy is to trade the false breakout of the major support or resistance levels. So now, let me go back up here. Okay. Now, false breakouts are one of the most powerful price action strategies. It occurs in all types of markets. And if you know how to use it in combination with an engulfing bar pattern in a major support level or resistance, you will make money in the market because you will buy intelligently the bottoms and sell the tops. And we just talked about that. When it's up at the resistance level at the ceiling, you're looking for a sell. When it's coming down to the support level at the floor, you're looking for a buy. And the false breakout up here, we know about a false breakout. I mean, a false breakout because of, let me get rid of this. Okay, let's find a false break. Oh, let me get rid of this. Now, I'm going to show you a false breakout. You see that right there was just going above the 60, just going above the 60, and it was above the 60, and it was above the EMA, and it was in consolidation. It was just going sideways, 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 breakout. Y'all see that? Now, this is an engulfing bar candle. This is an engulfing bar right here. But we always saw it as a double top that's getting ready to come back down. Now, another.
Mr. Clay.
Uh-huh.
And Anthony vertical or Bridget point or something.
Right. Here's the vertical right here. And the Bridget point. See, a Bridget point, whenever you get to the Bridget points, it's a double top or double bottom. Those are Bridget point.
Okay, thank you.
Mm-hmm. So whenever you see a point, double top. Whenever you see a point that's pointing downward, double bottom. And give you a good example. This is a previous engulfing. You know, this is an engulfing, but we look at them Bridget points.
I like Team Win.
You like our strategy?
Yes, sir.
I mean, it seems to be simpler because I know if you just steady looking for engulfing bar patterns, it takes a little more focus and skill. You know, it takes a little more focus to, even though we see them all the time, we just never really, I really never really notice them because they right here in the face. That's an engulfing bar, but I focus on the double top, you know, and it's more simpler for me. Okay. Now trading, but you want to know all this stuff. Like, this is the Candlestick Trading Bible now. This is the Bible.
Yes, sir.
So trading the engulfing bar with supply and demand zones, we're going to start tomorrow. Did everybody learn something today?
Absolutely.
I hope we all did. Now I can do the chat thing. If anybody learned something today, put a 777 in the chat. And that's good. That's good. That's good. And I tell you, I am so honored and blessed too, because I tell you, when you're teaching, God gives you a double portion, you know. So
That's
I'm
right.
learning too.
Mr. Clay,
Yes.
I just want to say the same thing, that when you teach, you get more out of it than anybody else. It's a blessing.
Wow. Yeah, so it's an honor.
Yeah.
So I want to thank God for this call, and I want to thank God for you guys for staying focused on this incredible journey. And so tomorrow, guess what? We're having the money call at 8 a.m. Eastern, 7 a.m. Central, and 5 a.m. Pacific Standard Time, where we'll be getting these tips hosted by Bridget Moore. So you guys get ready for that. And any other questions anyone might have this evening?
Great call. Great call.
Questions, concerns? Oh, thank you, Bridget. Thank you, Bridget. So right now, tomorrow we'll be getting in on this. We're at page 130 right now. So we'll almost finish the book. We'll probably finish it tomorrow, you know. So I want to thank everybody. I want to thank God for God.
you, Mr. Clay? This is Zoe.
Uh-huh.
I did it a day at a time.
Yeah. Yeah. That's
I'm
right.
just saying.
That's
That's
right.
right.
I ain't
That's
got
right.
enough
So,
to say.
So we'll see everybody in the morning. You guys have a great evening. Any concerns, questions, or anything after the call, don't hesitate to give me a call. I'm always available for the team. I might not call everybody every day, but you know I love you guys, and we're going to keep this thing moving forward, okay? Have a
Love you
great
too,
evening
brother.
now.
Be peaceful, team.
Thank
We love
All
you.
right.
you.
Take care. See ya.
Be